Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, July 31st. It's 2:50 p.m. Eastern Time as I'm starting the video, so we do have the Fed announcement out of the way. Jerome Powell's answering questions to the press right now, but I wanted to get a video out to you guys. I just posted this chart in the trading room. I usually say, and I did have some early inquiries on some things like SOX and SOXX, the semis, and other things breaking down. And I want to say this. I always say that usually on Fed days, almost always, like we saw earlier right after the announcement, it's what I call post-FOMC noise. The market, which are millions of participants, both human and computer. You have algo programs that will literally rip through the Fed's statement before a human eye can read it, and they look for keywords and then fire off buy and sell programs. So you have just everybody, humans and non-humans trying to parse the data, figure out where we go from here. And I call that FOMC, post-FOMC noise, and I've seen it time and time again. You go up, markets shoot down, and again, we did see that after, but now we're seeing some pretty very clearly impulsive selling. Let's not mix words. And the thing is, it aligns perfectly with the technicals. So here's that XLK, as I said, I've been saying here, and I was saying right here, and I was saying right here, when tech breaks, the market breaks. And take one heck of a reversal. We're down 1.6% in XLK. Is it possible? Certainly, anything's possible. And I'm going to get the video out to you first before I can have time to mark up a chart or, consider an official trade. Like I say, official, unofficial, tomato, tomato. It's if you like the trade, the setup, take it. I can tell you that I am short the markets now. I'm looking at what's going on. Got a pretty good line going right now on the short side, and wanted to get the video out to you guys so you can decide what to do. I don't have targets on XLK right now, nor do I really even have them on QQQ, but we've broken impulsively down below that the rising wedge here, the uptrend line. We've also come back down below the 191.46. I will say the day is not over, so this daily candle hasn't printed yet. We could close back on there. Maybe we close a little below a snap, but sometimes you just have to take things on face value, and that's what this is. As of now, it's a breakout or breakdown, breakout of the pattern to the downside. Certainly could fail, but again, the impulsive nature. I'm watching, just waterfall selling going on. And again, I've seen things like this on Fed days in reverse, but if there wasn't so much evidence in the chart, I would just say, let's let the dust settle. And I still may wait until tomorrow before adding any official trades on the semis or tech or the markets, even if I do. But I just wanted to say, not a bad idea to maybe get some. If you don't have any short exposure, take a starter position. You can always add to it if you agree with this. If you're bullish, you buy the dips. You look at the levels here, and again, I'll have to sharpen my pencil and try to give you levels on the targets. But that's what QQQ looks like on the 60-minute chart. Let me just get to the futures, and I'll wrap this up so I can get out to you. There's NQ, Emini futures. We've been diverging. If you haven't caught any of the recent videos, I'll just say that that's been the story. Diverging. The divergences weren't even close to being burned through, so they've been indicating a big drop coming, or at least a considerable drop, and this is about as impulsive as it gets. And that's also a function of the extreme low volatility and complacentness that we've had in the markets recently. In other words, when you have the very low volatility, especially after a long grind up, market participants become complacent, and you have one-sided trades. Short's going to give up, so that leads to those quick moves down. So again, I'll wrap it up here because the day isn't over, and anything can and will happen. And you can see on the futures, if you're an ES trader, here's a level we're probably going to bounce when we tag it, 29, or at least have a reaction, 29.55. So the odds are good there, but it's not a solid resistance. And what you want to watch for too, this was a good level too, 29.74, but we went through it like a hot knife through butter. So these are things I look for. And again, because we're still in the wake of the FOMC announcement, I have to take it all with a grain of salt. And that's a strong move down, so maybe that's a momentum fueled overshoot. And you can see as I'm doing the video, we're coming back right up to that level. So far that was a momentum fueled overshoot, or really a bounce off this support. So we'll watch. If we close down below that level, especially a 60-minute close, or even better, a daily close, and that gives us, that is then resistance. It was or is support right now. We overshot it, but we're back on it, so that's support. And so we'll watch that. And if you go down here, that's your next support. Was already tapped on it once, so if we get down to it again, we could break. And if we break that one, we go down here all the way to about 29.17. That's ES. But again, I'll do a more thorough wrap at the end of the day. Just wanted to get this out there. And again, throw all these breakdowns out with a little grain of salt, maybe a little bit bigger than a small grain of salt, because it is the FOMC wake, what I call the post-FOMC noise right now. And so all this could be an overreaction, could turn around and gun it up. Powell may say something before this press conference is over that convinces the algos and the humans to gun it the other way. So let's stop here. I'll do an end-of-day wrap. We'll see how we close. And then the big thing is, how do we follow through tomorrow? Because anything that happens between now and the close, from 2 p.m. today up until the close, is still in that period of post-FOMC noise, I call it. Overnight, everyone will get a read through everything. People who are not full-time traders come home from work. They listen to read through what the comments were, turn on TV, listen to all the bubbleheads talk about where they think market's going, and then they decide, I'm talking mom and pop investors, whether they want to add more of their money in their, to equities or pull some of their money out. And so therefore, that's why it takes, a day or even a few days for the post-FOMC noise to kind of abate and settle down, and then the market will pick a direction. So that's where we're at now. We snapped above that support as I was talking about it, so we're back above there, but we're still down some pretty big red candles. I probably should have given you a support here. I mean, this is my preferred trading proxy, NQ, and I know a lot of you guys trade NQ as well, or the Qs, QQQ. So that was a level we overshot briefly. And again, the divergences indicate that even though this right now is induced by the FOMC meeting, that whether we pop up or not, that we're probably going lower, especially if the markets cannot reverse this post-FOMC candle here. If we can't get back above, let's just keep it simple, and then I'll end the video. I know I keep talking, but it's important. These days like today are when I need to do these updates. You have a little downtrend line there, and then today's highs. See all this area here we consolidated. So really look for that. If right now, then NQ has no business popping those highs. I think if it does, then they've engulfed this big drop down. That's pretty bullish. But again, it could be whipsaw city until the dust settles. So like I said, I'm showing you levels. I'm showing you things I'm looking for. And of course, if we start to, later today, we drop before the close and we undercut today's lows and we keep going, that's not going to be good. We'll probably gap down tomorrow. So we'll see. But again, I'll do a more thorough analysis with some levels to watch. I kind of didn't have all these charts marked up. Some of these lines are old and I'll need to adjust those. And then I'll get that out to you guys after the close. All right, this has been Randy Finney with the right side of the chart. Hope you enjoyed it.